Folks, stop what you are doing right now, because in the next few minutes, I am going to show you something that has been hiding in plain sight. A company that has spent over 40 years building something real. Something that governments trusted. Something that banks depended on. Something that kept money moving across some of the most important financial systems in Asia. And then, quietly, without any of the fanfare that usually surrounds big technology announcements, this company did something that almost no company its age ever manages to do. It completely reinvented itself. And if you are watching this video today, you are seeing this story before most of the investing world has caught up to it. So stay until the very end, because what I'm about to show you is one of the most interesting setups I have seen in this market in a long time. And before we go any further, hit that subscribe button right now and turn on notifications. We bring you breakdowns like this every single day. This is for educational purposes only. I am not a financial advisor. This is not financial advice. Always do your own research before making any investment decision. Now let us get into it. Let me take you back to 1982. The world was a very different place. Personal computers were just arriving. The internet did not exist. And across Asia, businesses and governments were dealing with a very practical, very important problem. How do you move large amounts of physical cash securely from one place to another? It sounds simple. But when you are talking about national banks, government institutions, and major financial organizations, moving cash is a serious, high-stakes operation. This company was built to solve exactly that problem. They developed the systems, the vehicles, the protocols, and the trusted relationships necessary to handle cash transportation, ATM management, cash processing, and currency center operations for some of the most important financial clients in the Asia-Pacific region. For decades, they did this work quietly, reliably, and professionally. No headlines, no hype, just a steady, trusted business doing critical work for clients who could not afford any mistakes. And they built something that most companies spend their entire existence chasing. Real trust, deep institutional relationships, a proven track record with the most demanding clients imaginable. Banks, government authorities, central institutions, clients who check every single detail before they hand you their money. But here is where the story takes a turn that most people in the financial media have not talked about enough. Because this company looked at the world around them and made a decision, a bold one, a decision that most companies their age never have the courage to make. They decided to evolve, not just add a few technology tools to the existing business, completely evolve. They began building what they now call Agentic AI. And here is why that word matters. Most people hear the term artificial intelligence and they think about chatbots. They think about a tool that answers questions, something you type at and it types back. But Agentic AI is fundamentally different. Agentic AI does not just answer questions, it takes actions. It makes decisions. It completes complex tasks from start to finish without a human having to guide every step. It observes a situation, reasons through it, and acts. That is an entirely different category of technology. And this company is building it, not talking about building it, actually building it and deploying it with real paying customers right now. Their intelligent cloud platform integrates AI agents with robotics to create systems that can automate operations across entirely different industries. In retail, their AI cameras track inventory in real time and correlate foot traffic with sales data, giving store operators insights that would take teams of people to generate manually. In healthcare, they are developing AI-powered speech therapy solutions, bringing intelligent assistance to patients in ways that were not possible before. In travel, they launched an AI platform that plans complete trips autonomously for real users, handling the kind of complex multi-step planning that used to require hours of human effort. And in robotics, they are deploying autonomous robots as a service, meaning clients do not buy a robot once. They access robotic capabilities on an ongoing basis, creating a recurring revenue model that compounds over time. And the business results are starting to reflect this transformation. In 2025, total revenue grew 8% to $35.2 million. The AI and smart solutions segment grew 15.3%, nearly double the growth rate of the legacy logistics business. Gross profit increased 7.5%. The net operating loss narrowed 10.1% compared to the prior year. That is not a company falling apart. That is a company getting cleaner, leaner, and more focused on where the real growth is. And the company is projecting revenue of $39 million for 2026, as the AI segment continues to outpace the traditional business. A global sportswear brand recently expanded their smart retail partnership, requesting deployment across 5 additional locations in 2026, and one more in 2027. That is not a trial. That is a client asking for more because what they have already received is working. And the company approved a $5 million share buyback program, a signal that management believes the current price does not reflect what the business is actually worth. Now here is what stopped me when I looked at this more carefully. One analyst covering this stock has a strong buy rating and a 12-month price target of $4.50. The stock today is trading under $1. That gap between under $1 and $4.50 is where the entire thesis lives. That is not a small gap. That represents the market's current uncertainty about whether this 40-year-old security company can complete its transformation into a genuine AI technology business. And the honest answer is, that question is not fully resolved yet. Which brings me to the risks, because this channel does not hide them. The company has received a NASDAQ compliance notice for trading below the $1 minimum bid requirement. If the stock does not regain compliance, it could face delisting procedures. The company is still operating at a net loss. The AI business is growing, but it has not yet overtaken the legacy logistics segment in size. And the overall market for agentic AI is highly competitive, with much larger and better funded companies competing for the same enterprise clients. These are real risks, and you need to understand them before you do anything. Never invest money you cannot afford to lose. Do your own research. Read every filing. Now here is the moment you have been waiting for. The company we have been discussing this entire time is Guardforce AI, ticker symbol GFAI, trading on the NASDAQ, a company founded in 1982 that spent 40 years building institutional trust across Asia Pacific, and is now deploying that trust as the foundation for a completely new agentic AI business. Current price under $1 at the time of this recording. Analyst target $4.50. Revenue growing. AI segment outpacing the legacy business. Buyback active. Sportswear brand expanding the contract. A real business. A real transformation. And a real question about whether the market has correctly priced where this company is going. That question, and whether you believe the answer is yes or no, is exactly the kind of thing worth doing your own research on. Hit subscribe. Drop a comment below. Are you watching this stock? We do this every single day. New stocks, honest analysis, same mission. See you tomorrow. This video is for educational purposes only. Nothing here is financial advice. Always consult a licensed financial advisor before making any investment decisions. This is a high-risk speculative stock. You could lose your entire investment.